All right, so this is part two of identifying a trend. And in this video, I want to go through with some live examples just so you can follow along and know how to identify a trend using market structure. In the last video, I went over that market structure is the points, the swing points in the market. And to identify a trend within the market structure, you have to use the swing highs and the swing lows to actually know your data points as far as the trend goes. For an upward trend, it's going to be a higher high followed by a higher high followed by a higher low, and higher high. On a downward trend, it's going to be a lower low followed by a higher high, lower low, lower high, my bad, lower high followed by a lower low. So if we use this in the market, we can kind of follow the market along to know what trend is in the market. A quick way of knowing the trend is looking at the market like this. And if the market is making this type of movement, it's going to be an uptrend. If the market, if you're seeing the chart do this, go from the top left to the bottom right, you know you're in a downtrend. So let's follow along with the actual higher highs and higher lows in this uptrend. So I'm going to start here. You have the higher high followed by a higher low, 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 higher high, and then this is followed by a lower low. So what does that tell me from this point here? So if a low becomes, like if you're in an uptrend and you have a lower low form from the last swing point higher, then that's letting me know that the trend could change. So now, with this point in time, I'm looking for a way to where I could potentially sell because this is the first indication of the trend changing. The second indication is when it makes a lower high. So it goes up here, it starts to stagger, and then from here, I'm like, okay, maybe the sell is about to happen. So maybe I place a sell. And you would have had a sell here. But if from this moment in time, it's a selling environment. So what has to happen for it to go back to being a bullish environment or a buying environment? The last lower low or lower high has to be broken. So the last lower high would be here. And as long as price stays below this, it's still a selling momentum. But what happens is price actually goes above and continues an uptrend. So because of that, you will continue it up for buying. Reason being is because price had broken back up and confirmed that the uptrend was going to start again. And now as soon as you get to this point, let's say this point in price, market, say we're at this point in price. What I'm looking for now is if it's going to continue or actually shift back down into the downward momentum. So if I'm looking at this right here, price needs to break the last swing low for the momentum to switch. The last swing low would be here. Because from this moment on, this was the move that created the new high. That move there created the new high, so this was the last swing low. So as long as price doesn't break that swing low, it's going to continue as an uptrend. So we get to this point here. It has a higher high, followed by a higher low, and then there's a higher high. So when that happens, and you get that new swing high, that means your last swing low is here. So wherever on an upward trend, wherever your last swing low that created the new high, that's the point that you have to watch in the market and see if the market is going to break that point. If it breaks that point, then you might have a change in trend. So if we keep going and say we get to this point in the market here, and say that is current price right there. My last market structure point before the move happens is it has to break this area, because this area is where the next swing high was created from. It was created from this swing low. So as long as price doesn't go down and close below this, it's still an uptrend. So make sure you pay attention to that when you're looking at the markets. Let me see if I can find the downtrend. Let's use a different chart. So uptrend, 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 downtrend. Okay, perfect. Let's clear all that. Downtrend. So this market right now is in a downtrend. The reason being is because price, if we let's follow it from the uptrend. Let's follow it from the uptrend. This move here created the new high. This move here created a higher basically a higher low, but it did not create a higher high. Then on top of that, not creating a higher high, it proceeds to create a lower low. From this point here, because price had broken the last significant low going down, now it becomes a selling trend. And what you're going to look for is to sell at the next relevant lower high, which would have been this point, and you would have had a great sell. But that's how you follow trend and actually be able to identify moves using the trend. But always be careful where you put your last significant point, or I call it the last stand point, the levy, because once that place is broken, then there's going to be a shift in the market. So when this lower low here, just to recap, when this lower low here was created, my major point, started from this move. So this is the last relevant swing high. So as long as price doesn't go above that point, it's still a downtrend. It can get all the way to here and then from there go down, and that's perfectly fine because it never broke this last significant high. And that's how you use trend to identify what to do in the market, to identify where to place your trades in the market. And this is some live examples of actually analyzing the market and being able to judge which direction the trend is going.